What's up, guys? Welcome back to the channel. This is still me, Solomon of Wisdom, and in today's lesson, I'll be sharing an ultimate smart money strategy that can make you profitable. This is actually a simple strategy. I'm going to simplify it and I'm going to give you a step-by-step guide on how to trade profitably using smart money concepts. Are you ready for this? Now, it's exactly 3 years since I started this free YouTube mentorship. I started 30th of April 2022, and the 30th of April 2025 makes it exactly 3 years I've been teaching this same concept, how to make profit with it, and how to become successful and consistent using this particular concept. To celebrate our anniversary, I'm dropping this exclusive smart money course using 3 real chart examples, and you know how it's been done. I will always visit our VIP community, show you these chart examples when it was shared and how we got the results. I don't mind whether it's a winning trade or a failed setup. That is how I do it, to tell you how effective this strategy is. Stick around to the end of this lesson. Just like I said, I'm Solomon Wisdom, and here is Born to Trade. If you're interested in concepts like this, consider subscribing to the channel, and let's jump straight into the contents of the lesson. I said this is actually an ultimate smart money course, the simplest way to become profitable. Let's jump straight into it. Looking at this particular currency, this is CHFJPY, and looking at the setup when it was shared, this is our VIP community. This is the setup right here when it was about 10 pips away from our take profits. Now, this was the exact setup when it was shared, and you see this particular setup was shared on the 12th of April 2025. So CHFJPY, the 2 hours time frame. This is the setup when it was shared, and this is it right here when it was just 10 pips away from our take profits. And over here, this is price getting to our profit targets. GBP, this is actually CHFJPY. Well, it's actually a mistake. CHFJPY got to a profit target offering 4%, so I need to make this adjustment. The adjustment has been made. If you look at it, you can see it from here, top left corner, CHFJPY 2 hours time frame. So this is actually it, and this is it right here. 10 pips away from the take profits, and over here it got to a target. This is not actually the only setup that was shared on CHFJPY. We equally have another one before we got to the demand level. So let me show you. So this is another setup right here. This is on CHFJPY. This particular one was on the 1 hour time frame. We had a setup from the supply level, and you can see down here we still have that demand level, right? So this is it right here. The supply level failed. CHFJPY, I lost 1% when the supply level failed, and then all interest was on the demand level. Now, price failed to react from the supply level. It wasn't as if the bias was wrong or our setup was incorrect, just that price spiked above a high and returned to mitigate the demand level. Now, let me go to the price chart and show you how this setup played out. Firstly, how we identified the setup, where we got it wrong, because we see the supply level failed. We're going to see where we got it wrong, and step by step, how we finally got an entry and how price got to our profit target. I hope you're interested. Don't miss. Let's get started and jump straight into that. So CHFJPY 2 hours time frame. Now, if you want to trade smart money concepts, if you're interested in being profitable with this particular strategy, whenever you come to me to teach you, I will always tell you one thing. The foundation of this particular trading strategy is understanding the directional bias, knowing the direction of the markets, where price is moving to, okay? Knowing the general context of the market. And you can actually know this in 2 different ways. Firstly, understanding the trend. So this is actually a bullish trend right now. Now, when you see price going bullish, reacting this way, forming series of higher highs and higher lows, price is bullish. And what will you do when price is bullish? You just have to look for your buy opportunities. Secondly, another way you can do this is knowing the institutional order flow, knowing where the institutions are moving their money. And how can you be able to know this? There are 2 ways you know where institutions are moving their money: when the institutions are rebalancing inefficiencies and when they are mitigating supply and demand levels. Now, if you look right here, It's very easy to identify. At this particular point, you see price was not able to get to the extreme level. This is actually very tiny, but I just hope you see what I'm explaining. This is price rebalancing an inefficiency right here. And after that, it's continued to the upside. And what else? It was able to break structure to the upside. So when price did something like this simply means that the institutional order flow at this particular high is bullish. You see, rebalancing an inefficiency and continuing to the upside. And after that, what else? We had a pullback. Where did this pullback go? Price went to mitigate a demand level. So if you see something like this, price coming back to mitigate a demand level and then continues with its uptrend, then this is price being bullish. And the simple thing you can do right now is just to look for your buy opportunities. Looking for your buy opportunity does not mean you have to trade randomly, or if you see any buy, you jump into it. No, you still have to calm down and try to identify what the institutions are doing. I just increased the size of the zone so you can clearly see it. So this is it right now. Now, let me give you a quick sketch so you understand how I trade some of these concepts. Now, if you look at the example, you can agree with me that at some point I tried to trade a reversal because I said you should trade in line with the trend when price is bullish. Now, at a particular point, I tried to do a counter trade. And why did I do that? Let me show you. At this particular point, you see price broke structure to the upside. I hope you can see that. And when price broke structure to the upside, all I did was trying to understand what the institutions were doing. After I identified the institutional order flow, seeing where the institutions are moving their money to, so I was able to identify the particular demand zone. Now, sometimes waiting for the whole time for price to return back to this point of interest, it might take a longer period of time because I trade from the higher time frame. The 2 hours time frame is actually very high and it takes time for price to return to some of my points of interest. Now, why I decided to try to take a counter trade was because price at some points we saw some internal structure, right? We saw price presenting an internal structure. And if you've been following this channel for some time, you know I've also explained how you can trade internal structure. So when you see a valid internal structure, you can go ahead and mark that level and anticipate that you're actually going to sell to buy. So you're going to anticipate to sell from the internal supply level and then buy from the demand level. That was exactly what the setup was about. So let me delete this and let me try to make some explanation with a real chart example. I believe is actually going to convey the idea the more and it's going to help you understand exactly what I'm explaining in today's lesson. Okay, this is the same chart, CHFJPY, the 2 hours time frame. Now zooming out, what can you clearly see? Price is bullish, the institutions are bullish, the institutional order flow is bullish. If you've been trading with smart money concepts, seeing all these things will be very easy for you. Price is clearly bullish right now. What do you have to do in simple time? Look for your buy opportunity. Now, if you are trying to buy, you still don't have to buy randomly because after an institutional move, there is what we call a pullback. Because if you notice, every time price reacts massively, when we see this move, you see we had a pullback. After this move, we had a pullback. After this move, we had a pullback. Even when we had this institutional move, we had a pullback before the recent institutional move, and this is the current pullback. So this is how smart money works. When price reacts in one direction, we usually see a pullback, and this pullback is what we call smart money correction. This is actually price correcting, and this moment where price is correcting, this is when we map out the point of interest we would want to trade from and anticipate that price gets to these levels and we trade from it. Now, what are the points of interest we trade from as smart money traders? We usually trade from supply and demand zones, and we equally trade from our order blocks. Personally, these are the levels I trade from. Now, I'm going to show you how these trade opportunities were caught. Firstly, let me show you what an institutional move looks like. So this is an institutional move right here. You see these big candles. If you've been following me for the past 3 years, you know that I don't joke with this kind of move. Anywhere I spot a move like this, I pay close attention to that area and anticipate that price is going to come back to that level because that is what I call killer zone. These are my kill zones. After that, what else can I clearly spot here? I was able to spot a clear price inefficiency because not just seeing this move, if I see this move and it doesn't have pricing efficiency. What is pricing efficiency? We call it imbalance, and some people can go ahead and call it fair value gap. So you see this space we have in between these candles. This is what we call price imbalance. So when I was able to spot this price imbalance, I already know that this is the trade I'm going to take. This is a very good trade because at this point, price is bullish. We have the imbalance. This is where I looked to mark my demand zone. And where is your demand zone? We have what we call a range created demand zone, and the whole of this range is your demand zone. This is how we mark supply and demand zones. If you want to mark your demand zone, this is actually a very valid zone, but it's not the best way to mark your zones because you won't even make a lot of money trading from large zone because this zone is very large. So this is where I looked to mark a pivot created demand zone, which we sometimes call an order block. So this is why I looked to refine it to the last opposing candle before that institutional move. So where is the last opposing candle in this case? You see the black candle you can see there is the last opposing candle before this institutional move out of this range, and you see it was able to break above the recent high, which we call a valid break of structure. So it's actually a valid break of structure in this case. So this was how I was able to spot the demand zone. Now, I talked about counter trading, trading against the trend, trying to take some trade that is against the trend. At this particular point, why was I selecting the supply zone? I've been waiting for a very long time for price to return to this level. This particular pair is one of the profitable pairs when it comes to smart money strategy. Now, if you want to read the structure of the market, you see was the most recent break of this high. When price reacted underneath this low, this is what we call an internal shift, price shifting in the internal structure. So at this point, I had a decision to take a counter trade. This particular trade opportunity, I spotted with the VIP student. So if I go back to the record, I will still bring evidence of when we had this analysis and how we were able to spot this trade opportunity. So at this particular point, this is me selecting an order block again because the bullish candle right here is an order block. And if I actually wanted to mark the whole of the range, if I marked the whole of the range, I would have been safe. Because how did we mark the demand zone? If we apply it here, I wouldn't have lost money on this trade. You would have marked the whole of the range, which makes it a range created supply level. This would have been the actual size of the supply level. But I usually do refinement to the levels I trade. So this is why I refined it down to the order block. Okay, down to the order block, and I have my reasons for doing this refinement. This was where we had the pricing efficiency, and price also builds liquidity inducement area, which I call smart money trap. With this inefficiency, it makes it a high probability trade because of the confluence we had. So that's why I was looking to sell from the level and buy from the demand level. This was how I spot these trade opportunities. Now, for the demand level, we equally have a liquidity inducement area, which is the level we had over here. So this was the whole trade opportunity, selling from the supply level and buying from the demand level. Now, let's press price forward and see how price reacted to these trade setups. Now, price reacted to the downside, and now we're getting a pullback, and this is the exact time price tagged me in this trade, and I was actually anticipating that price is going to reverse. But let's see, price tags me out, and finally it starts to drop. So, and I believe you all know why price tagged me out in this particular setup. I selected the refine zone, and if I actually selected the main point of interest, including this particular high we have right here, I selected this level. If I actually included the high we had over here, believe me, I was actually safe and I wouldn't have lost money on this trade. But because I did some refinements, I had to lose 1% trading from the supply level. So this is actually another thing you have to understand. Smart money concept is very effective, but it does not mean that I don't lose money trading with it. Yes, sometimes you lose money trading with the strategy. As a matter of fact, there is no strategy that works 100%. And let me just tell you, I have less than 50% win rates trading with this particular trading strategy. So so you don't start having high expectation. I'm telling you the reality. I have less than 50% win rates, and I use 4 risk to reward ratio whenever I win my trade. So using 4 risk to reward ratio, I have less than 50% win rates every month. So you can go ahead and compare it with other risk to reward ratios. Someone who use about 2 risk to reward ratio might have up to 80% win rate because price usually reacts from every supply and demand levels. Now let's press price forward and see the outcome of this particular setup. Now price reacts from there, and finally it got to the demand level, right? This was price coming to the demand level with almost zero drawdown and starts to react. Now, during last weekend, I and my students were active in this trade. That's why I asked them to move their stop loss to break even, or alternatively place it maybe underneath this particular candle. So when price tags them out, at least even if they don't make full money, they just make little money from the setup. But the setup actually respected the analysis and continued to the upside. You see, we had a little pullback, and from there, price moves away. And this is the recent price action, today being the 1st of May 2025. And you see, price respects the demand and react. So I lost 1% from the supply and I made 4% from the demand, which gives me 3% from this particular setup. And 3% is a lot. I believe with this little breakdown, you've been able to understand exactly how you can trade using smart money concept. Like I said, I have 3 solid examples and I just presented the first. Let's see the second one from the community as well. So this is actually the exact setup we just had, the analysis, losing from the supply and making money from the demand. And you can see the exact red line where I asked them to put their stop loss during the market close. So this was where I asked them to place their stop loss. Now, let's see more examples. The next one has to be on AUDUSD. And just like I said, this particular one, I shared it to the free community. AUDUSD 1 hour time frame. This was when price got to the profit target, that is 4%. And this is the setup when it was active and running. This is it right here when it was shared, right? This is the exact trade opportunity when it was shared. And if you look from the left, you see we already had a mitigation. So this particular one, I took the first setup with the VIP. So let me show you that setup from the VIP. So this was actually the very first setup that was shared on AUDUSD, and that particular one was shared on the 30 minutes time frame. So here's the setup. We lost trying to trade from the demand level, then we had a different bias, and this setup was shared where we look to trade from the 30 minutes. So on the price chart, I'm going to show you. Now let me show you the second one from the free community as well. So here's the second one after price mitigates the demand. We had the second one, and these are the results right here. These are the results as well. So let me show you quickly. And mind you, if you want to join the free Telegram community, the link is in description. You can look to click and join. So let's see examples for the AUD/USD setup. But before that, let me introduce our mentorship. Our advanced smart money mentorship is still running. This is Born to Trade Advanced Smart Money Mentorship. In this mentorship, you're going to understand how to trade with smart money concepts and how to take advantage of them. If you join this community, you're going to have access to our advanced smart money course. We have a breakdown of smart money strategies, step-by-step guide. It's going to guide you on how to treat these concepts from the very first concept to the last concept. You're going to be part of our weekly charts breakdown, where I and the VIP students come live to analyze the market and break down the markets. You're going to be part of a VIP support community. That is the support group. You have a group where traders interact, advanced and beginner traders interact to share ideas as well. You're going to be part of our premium possible setups. You're going to be part of the community, which is where I usually share the VIP trade opportunities. You're going to be part of the weekly Zoom meetings. That is the weekly webinar. You're going to be part of us where we come live to break down price and analyze the market. So this mentorship costs $216. And I think in the next months, in the next coming months, is actually going to get to the original price, which is going to be $320. So if you're interested, you can go ahead and enroll. And if you have a personal problem or a personal request, you can go ahead and send or maybe text me on the WhatsApp link right here. Click on those links and chat me privately. And you can actually look to check out the reviews from our VIP students. You can read more to see the reviews from the VIP students. Okay, so this is it. If you're interested, you can look to join us today. Let's see the second example. So the second example is on AUDUSD, the 30 minutes time frame, but let's start from the higher time frame. This current time frame is on the 4 hours time frame. Now, from the 4 hours time frame, we actually had a very good level right here. This was a demand level, and we were looking to short the market because the order flow right here was bearish, and we looked to short the market. Now, this have to help you understand that sometimes if you have a bias, your bias can fail, and if it fails, you have to move on and focus on the next trend. So this was actually our zone, and we looked to trade from the zone, but you see, price moves above our zone, and this is me losing 1% from this particular area, losing 1%, and I couldn't make money from the first trade opportunity. So since price has now broke above this high, this has to change how we see the market. We had a different bias, and now our bias in this particular case is bullish. So in order to get a trade opportunity, this is where we and the VIP had to drop to the 30 minutes time frame to see trade opportunity. So here is the 30 minutes time frame, and what you can clearly see is that the supply level failed and the 30-minute structure is currently bullish. Now, where is the best place to get involved in this case? Because price is bullish, and since price is bullish, all you have to do is to look for your bullish opportunities. That is a trade that is actually going to move to the upside in simple terms. Now, looking at these particular areas, if you look at this area looks nice, but I don't think this is actually the best place to take your trade, because if you look down here, this is actually a liquidity inducement area. This is price building liquidity right here. This is why I call these kind of areas smart money trap. So since we have a smart money trap right here, this is not the best place to trade. Instead, the level we had down here is the best to trade. So that's why we selected these points of interest, including the inefficiencies we had right there. I hope you can see that we included that. And when I was actually marking the points of interest and the setup, I selected this one as the liquidity inducement area, but the most obvious liquidity inducement area was the one we had down here. So when I marked this, all you had to do is to wait for price to come back to this level. And you can agree with me that the order flow is bullish, breaking structures to the upside. You see, this level has liquidity inducement, and this is the best range created demand zone on the 30 minutes time frame. Now, playing price over to see how this reacts. See, price came very close to a level after sweeping the liquidity inducement area, reacting to the upside without actually getting to our zone. And from there, you see, price moved away, and we had a reversal back into the range, and it was actually at this particular point price tagged us in and starts to move away. You see, price starts to move away from there, and we had little reaction to the upside. Now, the particular setup that I shared to the free community was on the 1 hour time frame. I can actually spot it from this time frame, but let's go to the 1 hour time frame for a clearer view. This is price returning to the level and reacting away after we had the mitigation. And when price reacted from this level, although price is still reacting to the upside, I actually made 4% from this setup, but what it offered in the community was about 6%. Now, marking out the level, this is actually the next level we looked to get involved from. This is the next demand level, which is the setup I shared in the free community. And you see, this is the liquidity inducement area. Now, playing price forward to see, price moves away. It came back to retest the liquidity inducement area. So this retest right here has now confirmed that this is a liquidity inducement area, and you should be very careful if you are selecting this area as where you want to trade from. Now, playing price forward to see how price returns back to our point of interest. See, price came back from there. Price moved higher after it came very close to our zone, and it wasn't able to mitigate our zone because at first price came, sweeps the inducement, react to the upside. Then at this point, this is where we started getting the pullback inside the range. Then finally, price came again, mitigate our points of interest, reacted a little more, and it finally got to our profit target before we start seeing this reversal. So I believe these two examples is actually very nice. And from what you can see from this particular setup, I made 4% from here, made 4% from here, which is about 8%. And I lost 1% on this particular one right here, which means what I made on this particular AUD-USD pair is 7%. So this is how profitable trading with this strategy is. So I think I should show you one more example before I look to end this session. Going back to the VIP, as a matter of fact, we have a lot of setups. If I'm to show you examples, we have a lot of trade opportunities in the community. We have a lot of them right here. We have a lot of setups here in the community. We even have USD, GBPCAD. Okay, let's take a look at the GBPCAD setup. I think this will be the last one for today. This is GBPCAD. The 2 hours time frame. This is it right here when it was active, and this was the setup when it was shared. This one was shared on the 23rd of, let me see, 23rd of April 2025. So this is it right here when it got to the level and mitigates a level, and finally this price moving in profits. So let's see it on the charts. GBPCAD, this is the 2 hours time frame. Now, on the 2 hours time frame from the markups we had, you can see I actually marked a level around this particular area before I marked the second point of interest where price is currently respecting. Now, if you look at this particular one, you see it's very similar to what I explained when I started this lesson. I said you need to understand the direction of the market. If I zoom out, where's the direction of the market? We had a shift in structure around this particular area, and from there, price has been bearish. Now, we're going to anticipate a pullback before the continuation. Very, very simple. This is how to trade. And another thing you can see is that we had a mitigation of this particular high right here. Price mitigates this level before the drop to the downside. So since we had the mitigation of that particular level, all we have to do is to look for the next available point of interest to get involved from. Now, right here, price starts to pull back. And if I'm to mark the point of interest, this is a very valid point of interest right here. This is a very good level if you want to trade from here. So this was the point of interest I marked. And what are the confluence that makes this a high probability setup? You see, price left some inefficiencies around this area, and this area being a liquidity inducement area. Being an inducement area, price has built a lot of liquidity around this particular area, even though we had another inducement area around here, but this is the most obvious liquidity inducement area we have currently. And you see price is very close to the level. As a matter of fact, I lost 1% before price got close to this level. I lost 1% around this particular level because I wanted to get involved from this area, but it failed. It was actually shared to the VIP as well. So we lost 1%. I and the community, we lost 1% trying to trade from here. So if you take a look at the setup, after the explanation, I'm going to go back to the setup. You still see the particular zone we lost was marked around here, and I still left it on the chart because all my setups, I leave it on the chart. So if I want to back test, it's very easy for me to do my back test. So liquidity inducement area, pricing efficiencies, a very good supply level to trade from. And now we have a trend line liquidity right here, which could be a very good target. You see, price is building liquidity around this area, which is a very good target. So all I did was wait for price to get to this level, and we look to get involved. So let's press price forward. See price come, tags us in, and from there, price starts to move away, and it swept the liquidity that rests right here. But price is dropping right now after we had this little pullback. So I believe these little examples I've shown you has now helped you to understand how you can trade with smart money concepts using the directional bias, understanding where price is moving to. Just like what we're seeing right here, it's going to help you understand the exact place price is moving to. So this was the exact setup, the level that we had the mitigation, although we didn't trade from the first level. I actually had the level marked out, but for some reasons I didn't share to the VIP. But to the second zone, which price is currently reacting from, this was shared to the VIP, and we made money from this particular trade opportunity. And from what you can see here, this was the second zone I tried to get involved from, but it failed. So in this particular setup, I made 3% currently, and I'm actually anticipating that price is going to get to my target to give me clean 4%. And you see, I lost 1% here. So currently I just have 2%. But if price gets to my target, I'll be making exactly 3% from this trade opportunity. So like I said, we have a lot of examples. This is another one, AUDJPY. This particular one is very close to the profit target now, the last time I checked. With the examples I've shown you so far, you're actually going to backtest it and see how smart money strategy works and how you can make money by trading with smart money strategies. I believe this lesson was helpful. Thanks very much for watching this particular lesson, and see you in the next lesson.